Good Monday, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is Not Important, and I'm your host. Let's effing go. UK banks are turning away crypto clients. Report. US crackdown will push crypto center of gravity to Hong Kong. CZ Binance influencers face $1 billion lawsuit for unregistered securities promo. And XRP news. Where's the title? Oh, there it is. Relist Xrp on Coinbase trends again, and here's why. All right, guys. Let's go to the market. Market cap $1.18 trillion. Bitcoin dominance 46.5. ETH 18.5. ETH transactions will cost you 19 GWEI. Bitcoin sideways. We had a little bit of a pullback yesterday, which we'll look at, but still super flat, super boring, super sideways. Any big pumpers? Cardano's moving a little bit with 3.64, up 13.24 on the week. XRP sitting at 10.39 for the week as well. Nothing too crazy across the board. Yep, nothing insane. Yeah, let's just go ahead and jump into the charts. Bitcoin. Well, that's what we've been looking at, y'all. Potential double bottom, potential double top. What am I saying? All right, let's go to the 4 hour. Yeah, guys, the thing that we're looking at here, at least that I'm looking at, I'm not really seeing anything crazy that pattern-wise. I'm just seeing sideways movement, and we have been seeing sideways movement since back in March 17th. Getting close to a month now. Same levels, guys. 28.9. Can't get above it. Can't hold above it. This 27.98, we'll just call it 28 psychological level. It's probably what people are actually betting on. Seems to be becoming significant support. Anytime we get a dump, we rush right back up to it. But let me go back real quick to 1 hour as well. We had this dump yesterday, and I was talking about this on our Twitter channel, our Twitter account. Yeah, we got a double blood diamond, which look. There's the fact that there was 2 blood diamonds, you knew a pump was coming, or a dump, excuse me. And then we got 2 manipulation X's, again another dump. But it got bought right back up, which, I mean, that's bullish, right? So a new support level that I'm kind of looking at right here, this 25 or 27.59, 27.6. Support there, support here, support here. Yeah, guys, nothing too exciting. It's been kind of boring. Sideways movement. ETH broke out of this flag. Sorry, I jumped to Ethereum. I jumped to ETH without telling you guys. I think I left you guys last week talking about this potential bull flag. We did break out. We got a mini pump. We retraced. We actually turned 18 into support, but then we dumped back below it, and now we're fighting again. So again, what does this all look like? This just looks like complete sideways movement, consolidation, which isn't bad. Hopefully, with the larger coins, and by larger I mean Bitcoin and Ethereum, moving sideways, maybe we'll start to see some alts run. So keep your eyes on alts, guys, and we'll see where they go. Outside of that, XRP still in this descending channel, maybe a bull flag. Keeping my eye out for a potential breakout. Cardano, opposite. potential inverse cup and handle, but even negate the cup and handle, we are in an ascending channel, which is technically bearish. Could potentially break to the downside. The only caveat to this is the potential that we're turning 37 cents into support, because we dropped down, touched it, took off, came back, touched it, came back, touched it, took off again. So keep your guys' eye on that 37 cent level for potential support. If not, if we break back down below it, we could potentially break down below this channel and make a move to the downside. Nothing crazy. Again, this isn't financial advice, guys. I'm not a financial advisor. I'm not even a good trader, and this isn't a trading channel. Just letting you guys know what I look at. On the news, let's get you guys informed and out of here to start your week. UK banks are turning away crypto clients. Challenges for crypto companies range from having applications rejected, accounts frozen, to being overwhelmed with paperwork. Damn the paperwork. Crypto companies are facing difficulties assessing banking services in the United Kingdom, according to multiple sources interviewed by Bloomberg. The few banks still working with crypto firms are requesting more documentation and information about how they monitor client transactions. They want to know what you're doing with your money. Challenges including having applications rejected, accounts frozen, and overwhelming paperwork. Crypto companies had even complained to the government of Prime Minister Rishi Sunak as the situation worsened in the past weeks. The move goes in the opposite direction of Sunak's plans to prioritize financial technology disruption and make UK a global crypto hub. The UK banking reaction has been more acute than the EU one, Tom Duff Gordon, Vice President of International Policy at Coinbase, told Bloomberg. According to Duff Gordon, the European Union's effort to establish a framework for digital assets are making banks more receptive to crypto firms in other countries. The European Parliament, man, Monday mornings. The European Parliamentary Committee passed the Markets in Crypto Assets legislation, the MICA, in October, nearly 2 years after it was first introduced in September of 2020. Its final vote is scheduled for this month. Bingo, bango. So far, 2023 venture capital investment in digital asset companies reportedly dropped 94% to $55 million in the UK, according to data from PitchBook, against a 31% increase in other countries in Europe. Crypto companies are turning to payment service providers such as BCB Payments and Stripe to maintain business operations in the UK. Early in March, the HSBC Holdings and Nationwide Building Society banned cryptocurrency purchases via credit cards for retail customers, joining a growing list of banks in the country to tighten restrictions on digital assets. Also in March, the Self-Regulatory Trade Association Crypto UK proposed the creation of a whitelist of registered firms in the country to address banks limiting or banning transactions with crypto companies. Many of the major UK banks have now put in place bans or restrictions, and we are concerned that other banks and payment service providers may also soon follow suit, said Crypto UK. We believe that government action is now warranted. Similar to the United States, authorities in the UK are tightening regulations on crypto companies. The Financial Conduct Authority proposed in February a set of rules that could subject executives of crypto firms to 2 years in prison if they do not meet certain conditions related to promotion. And the attack continues. What does this look like moving forward? I have no idea. I'm just trying to watch it all play out. Trying to be steps ahead of it would be awesome. I would like to be, but I mean, really, is the plan to slow down? Is the plan to cut us off from crypto? I don't know. But they definitely are coming after crypto hard. Let me know what you guys think. Comments down below. U.S. crackdown will push crypto center of gravity to Hong Kong. That's what we've been saying for a while. That China might be running the next bull market. Kaiko CEO Ambre Sobrian said that Hong Kong's friendly approach might make the city the center of gravity for cryptocurrency trading and investments. The United States government frosty approach to frosty, huh? Salty might have been a better word. Approach to cryptocurrency regulation could ultimately see the industry's center of gravity shift to Hong Kong, says Ombre Sobaran, the CEO of Paris-based international crypto market data provider Kaiko. The U.S. has been at the forefront of the crypto sector for quite some time. However, with the government seemingly adopting a regulation by enforcement approach, there is growing feeling by some that a significant amount of companies, developers, and investors will soon flock elsewhere to work in friendlier environments. You think? Seems to be something we do here in the U.S. constantly. We push business outside of the U.S. and wonder why. Speaking to the Wall Street Journal on April 1st, Sobaran suggested that the recent crackdown on crypto in the U.S. will inadvertently, I don't know if inadvertently is the correct word, they might be doing it on purpose, help Hong Kong in its goal of becoming a major crypto hub. The U.S. being more stringent these days than ever on crypto and Hong Kong regulating in a more favorable way is going to clearly shift the center of gravity of crypto assets, trading, and investments more towards Hong Kong. We want to be where our clients are, she added. The U.S. government has become increasingly aggressive towards crypto since the collapse of FTX in November of 2022, with Senator Elizabeth Warren, she's a winner, even recently stating that they are building an quote-unquote anti-crypto army. Good luck. Hong Kong, however, has been moving in the other direction. In January, the Hong Kong government initially outlined plans to become a crypto hub by rolling out progressive regulations to support high-quality crypto and fintech firms in 2023. While the regulation is yet to be fully ironed out, Hong Kong Security and Futures Commission, the SFC, proposed a crypto licensing regime on February 20th, which aims to provide consumer protections without stifling innovation. So far, more than 80 virtual asset-related firms have expressed interest in setting up shop there, according to a March 20th speech from Hong Kong Secretary of Financial Services and the Treasury, Christian Hu. He also noted that 23 crypto firms in particular have already indicated that they plan to establish their presence. Adding to the positivity coming from the Special Administration region of China, Bloomberg reported on March 28th that the Hong Kong Monetary Authority and SFA are set to hold a joint meeting on April 28th to help crypto firms set up domestic banking partnerships. Chinese banks such as Shanghai Pudong Development Bank, the Bank of Communications, and the Bank of China have reportedly started offering banking services to crypto firms in Hong Kong or made inquiries with crypto firms. Sobaran also revealed in mid-March that Kaiko is looking to relocate headquarters of its Asian Pacific unit from Singapore to Hong Kong in response to the country's friendly crypto stance. What we're seeing is a clear support for more clarity on the regulatory framework in Hong Kong, she told Bloomberg in an interview, adding that while we're seeing an increased attractivity to Hong Kong in the region, we are relocating. Yeah, I mean, I don't know, is that the plan? Is the Biden administration in cahoots with China? I don't know, it seems to be a rumor. Are they pushing business to China on purpose? I don't know, man. I don't know, let me know what you guys think, comments down below. Either way, it doesn't look good for the US or crypto. CZ Binance influencers face $1 billion lawsuit for unregistered securities promo. They've been talking about this for a while. While 3 American citizens brought the case, the lawsuit alleges that millions of people could be eligible for damages. I gotta be honest, I don't side with this. Stop buying shit that people on TV or on the internet tell you to buy. 5 days after Binance and its CEO, CZ, were sued by the United States Commodities Futures Trading Commission, CFTC, for allegedly trading violations, a new $1 billion lawsuit was filed against the crypto exchange CZ and 3 crypto influencers for promoting unregistered securities. On March 31st, the Moskowitz law firm and Boyd Schiller Flexner filed the $1 billion lawsuit in the Southern District of Florida, claiming Binance's involvement in trading unregistered securities and paying influencers for the unlawful promotion of such services, according to Fortune. While explaining the charges, the filing read, "This is a classic example of centralized exchange, which is promoting the sale of an unregistered security." I don't agree with this stuff. I just don't. In a previous lawsuit against Voyager, the law firm alleged that influencers promoting unregistered securities are liable for customer losses based on similar claims. Binance and the influencers, NBA Miami Heat star Jimmy Butler, and YouTubers Graham Stephan and Ben Armstrong, BitBoy Crypto, are challenged with paying $1 billion for damages caused to investors. This, look, you guys know I defend Ben a lot, but this is such a low blow, slimy bullshit article. I gotta be honest, guys. If you watch Ben at all, you know how hard he's been fighting this and going after the legal team that has supposedly claimed that he took money for promoting FTX, which he said he never did, and he has proof to. I mean, literally, you can go through all his videos, and he's not. It's just funny because Ben isn't like one guy in his mom's basement doing videos. It's a well-oiled machine over there. It's a very large business and corporation. So the fact that whoever's writing this article is still even putting Ben in this, it's clickbait. It's trying to get people worked up about Ben again. With Graham, I don't know. I mean, I've watched Graham a handful of times. I don't know him personally, and I don't know what he may or may not have done. But you know for a fact, Ben is fighting this tooth and nail, and it's stupid. It's stupid. It's stupid to see that they named him in this article when there are other people that are involved in this lawsuit, and Ben is like the main one that's like, "Fuck you, it wasn't me." Anyway, moving on with the article, guys. We've been investigating the same unregistered securities issues against Binance for over a year. Added the lawsuit, promoters and the exchanges facilitating trades of such assets would be liable for customer losses, in addition to suit claims that investors have no obligation to prove they were influenced by the advertisements. While 3 American citizens brought the case, the lawsuit alleges that millions of people could be eligible for damages. The law firm also plans to rope in more Binance influencers to the suit in future filings. I gotta get that money. Lawyers gotta get that money. Meanwhile, CZ and other top Binance executives have been concealing the crypto exchange's ties to China, claims a Financial Times report. We no longer publish our office addresses. People in China can directly say that our office is not in China, Zhao has reportedly said in a company message group in November 2017. However, speaking to Cointelegraph, Binance confirmed that the company does not operate in China, nor do we have any technology, including servers or data, based in China. Adding, while we did have a customer service call center based in China to service global Mandarin speakers, those employees who wished to remain with the company were offered relocation assistance starting in 2021. According to Binance, its 8,000 full-time employees live across Europe, the Americas, the Middle East, Africa, and the Asian Pacific. Yeah, guys, I don't know. To me, this all looks like frivolous lawsuit bullshit. I don't think anything's gonna come of it. And I apologize for even pulling the article up and wasting your time reading it. There wasn't a lot in the news today, guys. I gotta be honest. I expected a lot more this Monday, but it was kind of boring. No pun intended. All right, last but not least, XRP news. And again, I'm going to start trying to kind of pulling a lot of XRP news, if there is anything to read, into the channel, just because it's interesting, man. If this case tips, this will be huge for the entire crypto community. This will be huge for the entire crypto space. So whether you're an XRP fan or not, I think continuing to stay up to date on any changes in this case, in the situation that XRP is in, I think is relevant to the channel and to the crypto space. Because again, if this thing tips in XRP's favor, meaning like there's a judgment and the case is settled, in XRP's favor, we're off to the races. It's done and done at that point, in my opinion. So I'm going to continue to try and pull up XRP cases that are relevant, that just keep you guys updated on what's going on, or XRP articles. All right, sorry about that. Relist Xrp on Coinbase trends again, and here's why. XRP community attorney John Deaton, who is representing the holders of the token in the lawsuit between Ripple and the U.S. Securities and Exchange Commission, has outlined in a new Twitter thread why the definitions of quote-unquote investment and a quote-unquote contract are fundamental to the district court's ruling. Paul Grewal, chief legal officer of Coinbase, has responded to Deaton's legal explanations, causing the hashtag quote-unquote Relist Xrp to trend on Twitter once again. Digital asset investor who has been an XRP bull for as long as I can remember. I'm talking, I think they've been following digital asset investor, since 2018. Here's Paul Grewal's tweet. Mr. Deaton is exactly right. Investment contracts must include both investment and contracts, and those terms are set out by Congress and interpreted by the Supreme Court. Neither is present when it comes to a secondary sale of digital assets. And so there's digital asset investor calling him out and saying that relist XRP if secondary sales are not securities. CLO sides with Ripple, but will Coinbase relist XRP? Grewal expressed in his support for Ripple's legal opinion several times in recent weeks. Coinbase even filed an amicus brief in support of the blockchain company. Still, calls for XRP to be relisted have gone unanswered so far. However, the XRP community draws new hope from the comments by Paul. He wrote that Coinbase agrees with John Deaton's legal opinion on what constitutes an investment contract. The Coinbase CLO wrote, Mr. Deaton is exactly right. I just read that to you. According to the popular XRP community attorney, an investment contract is one of the most misunderstood legal terms in the law on social media. It is a legal term of art that was adopted from state law by Congress when it passed the 1933 Act. Crucially, digital asset and software code by their nature are not listed in the 90-year-old law. Therefore, in all SEC cases against Ripple, Telegram, Kick, and also Library, the only relevant term is investment contract, which was defined by the Supreme Court in the Howey case of 1946. In U.S. history, according to Deaton, there has not been a single case where the secondary sale of any asset has been classified as a security. Therefore, a cryptocurrency, which is software code, cannot be a security by itself. In Telegram, it was made clear that the Gram token was not the security, Deaton concludes. The ETH ICO constituted an unregistered security offering. Ripple may have offered or sold XRP as an unregistered security on a specific occasion, but even if true, it doesn't make the underlying asset, digital code, a security itself. Consequently, any altcoin arguably starts out as a security when it is first distributed, ICO or not, but after that, there is no legal basis to carry any secondary market transaction security sales, Deaton argues. Even if Grewal agrees with Deaton, the relisting of XRP seems unlikely at this point, as Bitcoinist reported. Grewal laid out in a recent interview with Tony Edward that a possible timeline for relisting depends on various factors. These are the rationale behind the court's decisions and Coinbase's assessment of whether or not the appeals court will uphold the decision. Basically, the Coinbase CLO assumes that both sides will appeal in a case of a clear defeat, which is why a thin win for Ripple would be the best outcome for XRP investors. At press time, the XRP price was 51 cents, consolidating after last week's stellar rally. Yep. Yeah, that chart's looking bullish as hell. Just being honest, XRP's looking bullish. All right, guys, that's all I got for you today. Let's look at Bitcoin one more time before we get out of here. Nothing new. Still moving sideways. All right. All right, per usual, if you do enjoy the content I provide here on Boring Crypto.io, please by all means subscribe to the channel, turn on that bell for notifications, watch, like, and please share the videos if you enjoy them. And I'll see you bright and early tomorrow morning. I am out of here.